Welcome, everyone. My name is Luca Ricci, Assistant Director in the African Department at the International Monetary Fund. Today, I will briefly cover two things. First, why digital payments matter in Sub-Saharan Africa. And second, what policy actions can promote their efficiency, speed, and reach. You probably recall Africa's telecom leapfrogging over the past 25 years, skipping landlines and jumping straight to mobile. Indeed, landline communication never took off. Subscription rose from 1 per 100 people in 2000 to just 2 in 2023. In contrast, mobile subscriptions surged over the same period from 2 every 100 people to about 90 per 100 people. Well, now Africa is undergoing a similar revolutionary leapfrogging, bypassing traditional banking through mobile payments. As shown in slide 1, only 1/3 of adults have a bank account, yet half already use digital payment systems. And the growth in mobile accounts and digital transactions is remarkable, as you can see from slide 2. Such digital revolution can heavily contribute to financial development and inclusion in Africa, supporting strong, sustainable, and inclusive growth. But why is it important to talk about digital payments specifically in Africa? Well, Sub-Saharan Africa faces unique structural challenges, and there are several. Low financial inclusion, high dependence on costly remittances, weak foundational and digital infrastructure, for example, electricity as well as mobile and internet, limited digital literacy, incomplete national ID coverage and informality, reliance on capital controls, gaps in IT skills, weak capacity and limited resources, and so on. Hence, these characteristics demand for more nuanced policy choices in Sub-Saharan Africa than in more developed economies. But what can Sub-Saharan Africa policymakers do about it? Here are 5, actually 6 key ingredients to success. First, tackle structural barriers head on. For example, Africa needs better infrastructure, more reliable electricity, broader internet access, and stronger mobile connectivity. Africa also needs universal digital IDs to unlock access and meet anti-money laundering and combating financing terrorism standards. And let's not forget financial and digital literacy, because tech only works if people know how to use it. Offline payment capabilities are also key, especially in areas where connectivity is still a luxury. Second, policymakers should support private sector digital innovations through an enabling, competitive, and safe environment that minimizes risks while leveling the playing field. Fast payment systems should ensure free entry, portability, and interoperability. Strong legal frameworks should ensure digital payment providers' products are well-backed and held to the same standards as traditional financial institutions, especially if they start offering lending or saving services. Data privacy must be protected, but balanced with anti-money laundering and combating financing terrorism and compliance. And yes, cash still matters. Even as the region goes digital, it must ensure people who rely on cash aren't left behind so as to avoid financial exclusion. As for crypto, it's exciting, but definitely not as official currency or legal tender. Countries in the region need clear legal and regulatory frameworks, especially to distinguish well-regulated stablecoins from the rest of the crypto universe. Third, policymakers should explore public sector innovations as complements and not substitute for private sector digital solutions. CBDCs should be explored and piloted, but CBDC implementation should be brought forward only when market failures persist, for example, when transaction costs remain high, or when private systems don't reach far enough, or when there are other strategic rationales, such as business continuity, facilitating financial innovations, and reducing cash management costs. Now, bear in mind that the case for CBDC may increase over time as digital finance evolves globally. Fourth, regional collaboration is a must. Crucially, policymakers should leverage on regional collaborations, first to pool resources and enhance efficiency, but also, and in particular, to reach interoperability across borders, which can boost efficiency, facilitate capital flows, and strengthen integration. Fifth, think beyond payments. Governments can digitize public finance from transfers to tax collection. You want one cool idea? Fractionalizing government bonds into bite-sized units that people can buy via mobile platform, a win for savings and inclusion. There's also potential for combining climate finance and artificial intelligence to attract capital inflows. And finally, there is no substitute for sound macroeconomic policies and adequate governance institutions in order to buttress confidence in the local currency and in the economy. In conclusion, digital payment innovations are transforming Sub-Saharan Africa. With the right policy and regulation, financial development and inclusion will thrive in Africa, contributing to strong, sustainable, and inclusive growth. Thank you for your attention.
Ladies and gentlemen, it's time. Come on. Let me hear you say, as he rocks like this.